Very good morning, everyone in Singapore. Very good evening in Europe and in New York. I have a great panel with me, and we'll discuss green bonds. With me, I have Mr. Vivek Pathak, who is the director and head of IFC for East Asia and the Pacific. He's also going to be the global head for climate change in a very short period of time, relocating back to Washington, D.C. We have Justin Chapman, who's the head of security services and innovation at Northern Trust, and Mr. John Horan, who's the capital markets partner for Linklaters. Welcome, everyone. To kick off this session, may I first ask Mr. Pathak to say a little bit more about what he does at IFC and his involvement in green and sustainable finance.
Good morning, good afternoon, good evening, wherever you are, and thank you so much to the Singapore FinTech Festival and Rahul for having me on this panel. I'm IFC's Regional Director for East Asia and the Pacific. I've been in this job for almost 6 years now, and I run our operations here. And what I found out when I came down here 6 years ago is that sustainability and climate are really becoming more and more central to investors, but really we were not getting the same response from our investee companies. So one of the things we've done over the years is really how do we get people to understand the importance of this topic, and not just because it's going to leave a better world for our kids, but also because what I firmly believe in is investing in this space and doing these things actually makes for good business sense. I'm a big believer in the fact that the green economy or the blue economy is going to turn up with winners in the next few years, and people in the brown economy are actually going to be suffering a lot more in terms of returns there. So that's the philosophy in which we've been trying to operate, and we've had, I would say, moderate success in the year 2019. Almost 48% of our investments in this part of the world were climate friendly. So again, my big belief is that it has to make good business sense. Thank you very much.
Thanks, Vivek, and congratulations on the new role. And IFC and the multilaterals like World Bank have been pioneers of this entire market. You did the first green bonds, you did the first investments, and I think now you're trying to set the standards and really make this market grow. Justin, I'd love you to introduce yourself. You're from London. Tell us a little more about what you do and your involvement in green and sustainable, and what you're really hearing from investors.
Yeah, thank you, Rahul, and hello, everybody. So my name's Justin Chapman, and I won't repeat my job title because it happens to be the longest one in the world, so we'll keep that short. But I look after security services for Northern Trust, but I also look after our innovation group. So my responsibility is really making sure that our solutions are suitable for clients in the future, and that we adapt and move forward with technology to try to make the end investor being able to access asset classes more efficiently. So really passionate about the area in terms of technology involvement, but also personally very passionate about green, blue, and ESG more general. So I think the panel today are really looking forward to explore how some of the benefits of deploying technology for things like blockchain can actually really help boost the asset class in the green bond space. So I'm excited to work with the other panelists on this group to really explore some of the opportunities. And I think there are some significant opportunities to add value in this particular space, given some of the current challenges or perceived challenges from the end investor in this particular asset class.
Thank you, Justin. John, if we turn our attention to you, I think you're vital to this panel because you actually at Linklaters, you along with your team, you draft the legal contracts around it. But tell us, what does your day look like? What is your involvement in the bond market and in green and sustainable finance?
Yeah, sure. Thank you, Rahul, and good morning, everyone. Good afternoon. So I'm a capital markets partner here in Singapore for Linklaters. My focus has been over the years on public markets. So we've been involved on the traditional green bond development, but in recent years also looking at digital assets and digital financial market infrastructure. So I think what's really interesting about this discussion is this confluence of the two issues. On our side, it's really thinking through some of the legal issues, but more importantly, the legal solutions around how we can get this stuff to work. And what we'll get onto is to be scalable and accessible to a wide audience of investors.
Thank you, John, and thank you everyone for being with us. I think the main purpose of this panel, and you can see there's different shades of green shirts that we are wearing or blue shirts, is that how do we make this asset class a little bit more greener? How do we make it things that, what's wrong with it? But before we get into that, Vivek, if I may request you to tell us about what is the financing quantum that the world needs, and where will this money come from? Because if we have to shut down old power plants, create new ones, or change energy guzzling light bulbs and get new ones, how do we get the money for it? How much is needed?
Well, thanks, Rahul. So, firstly, I wouldn't agree that something is wrong with the green bond system. You said, yes, sure, we can make them greener. So, a report that that I came across a few years ago said that the entire climate finance segment between now and 2030 will be around $23 trillion in emerging markets. And just to break that down, a large chunk of that is actually in green buildings. And that stems from the fact that as urbanization increases and as economies continue to grow, we're going to have more and more people migrating to cities or new cities coming up. And that's a big opportunity. And if I break that down, between power, logistics, green buildings in Asia Pacific would be an almost $17 trillion opportunity. So that's just giving you now these numbers. These are pre-COVID numbers, and I suspect you're talking about timelines going up or numbers coming down, but it gives you a quantum. I think a lot of this financing has to come from capital markets. I mean, I have no doubt in my mind, because clearly banks don't have the capacity to do this. Banks don't have the balance sheets to do this. So we're going to see heightened capital market development and activity in the climate space. We've already seen it grow rapidly, but it's still a fraction of what it should be and where it should get. And then we also need to get retail investors in, because I think the way I would sell this is, hey, this helps you the most, or this is really for your good. So we need to get retail investors in. We need to get pension funds in. We need to get more sovereign wealth funds, central banks. So financing has to come from all over. That's the only way we're going to get to these quantums that we need to succeed, or sort of come within the range of a 2-degree change in global warming. Yeah.
That's actually very interesting. $23 trillion is a lot of money. But I think what's also exciting, Vivek, is that this year already capital markets have provided roughly 500 billion. So, we are about 2% of the way there already. And I remember IFC and World Bank were the pioneers, along with other multilaterals in 2007, when the first green bond was done. But now you can really see that change accelerate. My question that follows up is, from investors, what is your ask from investors as you try and get this financing, this quantum? I'll come to retail and individuals in a bit, but what is your ask? How would you like investors to uh, behave in this market? What behaviors would you like to change?
So I think the only behavior I would like to change is to get what I call the brown investors and ask them to become more climate friendly. And if you look at the number of investors who are still investing in what I call the non-green or the brown asset classes, it's multiple times that of green investors. So I think, and it's a staged approach, so we need to convince the brown investors that the future is with green or with blue or with transition bonds. And I'll talk about that in a minute. And I think that is what is critical, to be able to demonstrate that investing in climate-friendly businesses is good business sense for the medium to long term. I mean, you talk about green buildings, a huge investment opportunity. Should you as an investor to put money today in what I call a brown building or a green building? No doubt in anyone's mind that a green building will have more value 3, 5, 7 years down the road. So really is to get people to start. And once that shift happens, then I think we'll see pricing differentials coming in between brown and green assets, which today are there, but very small. And at the same time, we have to also, let's not forget on the investee side. So you can have billions of dollars coming into the space, but if you don't have assets to put it in, then slowly you're going to have sort of lowering of standards, sort of, you want to go more green and then people will start going a little less green and more brown or sort of something like that. Yeah. So we also have to sort of convince a lot of our investees and our clients that they need to do more green. They need to make sure that real estate developments that they're doing are green. So it's not just renewable energy, but it's also the entire ecosystem on cities. There's a lot that can be done there, whether it's things like logistics, that's a big area, and we're going to see that growing. So we have to really focus on a lot of these areas and also make sure that there are investable assets that meet a minimum standard of green to come in. So it's going to be a two-way sort of street that we are focusing on. Yeah.
Thanks. And I'll come back on this minimum standards and how do we make that. And you touched upon some very interesting things, including that fact that greenium is still very, very low. But Justin, just moving over to you, you at Northern Trust are one of the world's largest custodians. You speak to asset managers, investors all the time. What are you hearing from them? Do you echo Vivek's thoughts? What else are you hearing from investors?
Yeah, I mean, if you look at the general trend in the investors, the wider umbrella of ESG investing is one of the hottest topics within our client base, and a subset of that is obviously green and blue bond creation, so which helps to balance an ESG portfolio. I think obviously some of the challenges around some of the investables is around liquidity in the market. I think we're starting to see spreads tighten, so and also the value and the return on these asset classes is variable, and I think the biggest point that we're really trying to help the investor with is the confidence in the underlying investment in terms of the amount we've been raised in debt in these particular asset classes. So I think there's a number of different activities that we just need to keep on focusing on. So we are definitely seeing an uptick. I mean, we've seen about 20% increase from last year in investment in this asset class, which is extremely high, but we're coming from a reasonably low base. Our client base is all of the constitution that Vic just mentioned. So we are actually probably working with the leading institutions in this particular space. So I think this is a huge growth opportunity. And I think what we really need to do is make sure that we can provide appropriate access to these asset classes with the confidence that the investors need, but also in terms of the liquidity in the platforms as well, to make sure that they have access to both change those investments over a period of time. At the moment, again, looking at the investment life cycle, that 5 to 7 years isn't an issue at all, obviously, for a pension fund. I think it's just actual confidence in actually how the underlying projects that are linked to these bonds are actually being executed. Is probably one of the key elements for the client base.
So you're saying investors are keen. A pension fund wants to buy a bond for 20 years and he wants it to be green. You said they want transparency. They want confidence, I think is the word that you use. How you had market infrastructure development, right? I think what I'd love to hear from you is we know the what. We need $23 trillion of funding, right? And let's assume for a moment the investors are there if it's green. But how do we fix the plumbing? You're involved with a number of blockchain initiatives. How do we make this transparency and confidence come together? And what are your thoughts? What are you doing in the space?
Yeah, sure. So, I mean, assuming the audience have got a reasonable understanding of blockchain technology, let's not go back to 101 on that space. If you can think about the sort of the ideal state here, sort of the nirvana, the future operating model, it's actually looking at structuring and capturing these asset classes at the first point, e.g. the issuance point. So if you can really truly define the prospectus, the program, the investment profile of that bond digitally to start with. So that sets the benchmark for how the investor understands and accesses that asset, and also sets the benchmark for the future review, audit, credentials, credibility and reporting. So the digitization really up front there allows for downstream traceability. So as soon as we get through the distribution layer, there's a couple of areas we can touch on distribution later on, whether it's wholesale or retail distribution, which I think is a really interesting point to gain traction in this market. But anything off of that bond in terms of digital life cycle can also be fully automated. So you've called all the asset class up front, any of the payment schedules, any of the settlement, any of the corporate actions can be fully digitized, which creates efficiency in that particular activity. But the most important thing at the end is really about the credentials and the reporting off of that asset class. So if you could imagine that we had a project in terms of investment in green buildings, but we could truly track how those projects and programs were feeding back off of the investment made in that particular asset class. So those project statuses reporting could come back in and report back to the benchmarks that were originally set when the asset class was set up. That thing can self-report. So I'm really looking at progress and project. how the investments were made. Did they really achieve the level of sustainability or benchmark in terms of outcomes that we were looking to get from the sustainable asset? Now, the more that builds back into the reporting mechanisms, that generates real confidence in terms of that investment and underlying, and then the underlying the projects and programs that back the bond. The technology we're using here has that capability. When we deployed, for example, in a private equity space back in 2007, we were actually tracking the LPA, which is the agreement around the private equity investments, and feeding in accounting entries all the way through the life cycle on an annual basis, which were digitally audited by an external auditor that gave credibility and a rubber stamp to the outcomes. So you can start introducing actors that actually demonstrate that the values are being achieved through the life cycle. And this isn't as onerous as it sounds, because the technology is pretty simple, but we're also working off of one communication, one record. So again, the confidence from the investor that you can have these external accreditation points, external reporting points being fed into the asset class and life cycle really starts to add a huge amount of confidence and value in terms of what they're buying is actually achieving the outcomes that they expected it to, as well as the investment outcomes, but actually the ESG outcomes as well.
Thanks, Justin. So if I summarize what you're saying, Vivek is saying we need the money. You're saying the investors are there, but then both of you are raising a very interesting point. Is that let's take a building, a hypothetical building that starts shiny, brand new, and deep green. But your investors want to know that how over the next 50 years do we ensure that this building remains cutting edge and green? And they'll finance it through a green bond, but they want to ensure that it remains green. And John, as always, we from the market side, come up with new ideas, but ultimately as the capital markets partner, you write the indenture, right? Is this possible? Can we make something like this, put it on blockchain that we monitor? What are you seeing? What are the recent developments? And is this smart green bond at all possible today, or will it need change in regulations?
Yeah, certainly, Rahul. And so look, I think maybe if I split it up and just initially just talk a little bit around the public green bond market, some great developments we're seeing there, and then move into the digital and the blockchain space. But on the public side, as you've mentioned, it's been a very successful year and lots of volume being issued. I think two developments which has been very positive has been the idea of a sustainability linked bond. A lot of the public bonds at the moment are use of proceeds bonds. There's not a lot of teeth if an issuer does not comply. So what we're now seeing in Europe in the public bond space, the actual financial consequences for the issuer if they don't comply with their intentions. You might have a failure of a KPI will actually end up as a step up in a coupon. So that's a very big move in the bond markets. For a long time, we've been saying that is a step that needs to be taken. Issuers need to have some kind of consequences if they don't comply with whatever sustainability principles or KPIs that they're aiming for. That hasn't yet hit Asia. There's a few European examples, but we are speaking to Asian investors, and we think that's something that will definitely come to the Asian markets next year. The second one, and Vivek has mentioned, recently there's been the first blue bond in Asia. So Bank of China has issued a blue bond where they've specifically identified marine and water use as the principles, as the KPIs for their bond. So while that's only that is a subset of the green bond position, it really is great to see that widening scope of the asset class. Those issues are really on the traditional side. So then I think the question really comes to can we bring those products and place them onto the blockchain? The great news is that there's a lot of projects in Asia already trying to do exactly that. At the end of the day, we're looking at legal enforceability, and that really comes down to, is there a binding contract? But also in the securities space, are there legal formalities which need to be complied with? And things like a bond register or a bond certificate, the types of things which we don't even think about in the traditional world because it's so established, everyone just accepts that it works. There's a lot of work in the digital blockchain space to make sure that we can create an instrument or security on the blockchain, on the DLT, that actually complies with those rules. I think ultimately it does require some regulatory engagement and legislative change. The great news is that's already coming, that's already happening. In particular, recently, Germany's come out with some Electronic Securities Act legislation. We obviously know the MAS is supportive of innovation and looking at some of these projects very closely. So I think we've made some very early stages. It's great to see the development so far. To really get full access, and I think to Vivek's point about retail for us as securities lawyers means more detailed disclosure, greater risks, greater protection of retail, things like prospectus liability. Those are the types of issues that we will need regulators to assist with to allow these type of instruments to be freely distributed to retail.
John, the prospectus work for the retail, again, that's a DLC plus. If we can digitally capture those up front and use them against benchmark and regulation, there can be some level of attestation automatically happening within that small contract space. We've seen that in a number of other asset classes. So I think that's another positive for this particular space. And also, obviously, the work we're doing in Singapore around fractionalisation on bonds at the moment as well could actually help in terms of creating additional opportunities for retail investors where particular bond lots aren't generally accessible. So I think, again, the overarching technology set really plays to the challenges we're looking at, and it also helps, I think, in terms of demonstrating to the regulators and the auditors and the third-party accreditors that the asset class is actually safer than could be perceived in a more traditional way. So I'm pretty heartened by the activities that are moving forward at the moment.
Vivek, you said you wanted to talk about sustainable bonds and about retail. So can I just pull you in on that and see what your thoughts are?
So I think what I was trying to get at is that green bonds were a start. Today, as John mentioned, we've got blue bonds coming in. Another big area is going to be transition bonds. What I keep telling my teams is that already talking to somebody who's already decided to go green is easy. It's not very easy, but it's relatively easy. What we need to be doing is also talking to what I call the brown economy and get them, because that's what's going to shift, move the needle. And that's where things like transition bonds and a whole sort of a roadmap on how do you transition from the brown economy to a more sustainable economy. I think John talked about the pricing linked sustainability bonds. That's a great example. And I think, if I'm not mistaken, Olam has done a loan like that already in Asia.
Yes.
So I'm sure we'll get a bond happening like that. So there's a lot of things happening at the end of the day. But the one thing I wanted to talk about is, and that's where I think technology and blockchain coming is standard settings. Today, if you look at green bonds, you've got multiple standards. So what do my investors want is, what's the difference between a standard in country X, a region Y, and a global standard? How do I know I'm investing in something that's truly green? And I think that's where really I would like us to work towards eventually having a convergence of standards. Now, the challenge in that, in all fairness, is that some of the standards that you have in more developed countries are easier to implement in those countries, whereas if you go to a developing country, it's not easier. So you need to give the emerging markets in some of these countries time to get the standards to a level, hopefully in a short period of time, but you have to have bare minimum standards. So I'm certainly not saying that you start with brown and get to green, but you've got different shades of green, like you said. So I think harmonization of standards over time is going to be critical if we want to get that big chunk of money, which is not in the space today, to move towards that space. Because investors want a level of confidence. They have to have trust in what they're investing in. And so that's part of it is standards, and part of it is going to come through technology. Yeah.
Vivek, could I just
confluence of all three? Sure, John, please.
Sorry, Rahul, but I thought just a really good practical example of that. Vivek mentioned this idea of transitioning finance. We've actually acted with issuers in emerging markets in Asia who want to issue a green bond, but can't at the moment because of a small part of their business. They may have a non-core part of their business, which might be some kind of coal activity, but that prevents them from going forward at the moment under the green bond principles. So what we're talking about when we say transitioning finance is, for those brown issuers who are looking to transition, giving them the kind of the framework and the ability to also access this market. And ICMA is actually releasing some guidelines in the next week or so around exactly this, providing some framework and principles around transition financing. So I think that agreed that that's a really positive development for the market.
Yeah. And all of us know that, in a classic bond, we have these credit ratings, and we have in many bonds, if the issuer does not remain investment grade, there's a coupon step up. We've done that in capital markets for decades. Perhaps, using blockchain technology and things that Justin was speaking about, we can have bonds where we say, okay, in 2 years, you become stop being brown. And if you maintain the highest levels, you pay the lowest coupons. But if you start to slip, then your coupons go up. Is that, throwing it up to everyone, is that what a smart green bond will look like?
I think the opportunity to introduce that into the structuring and the issuance stage is absolutely there. So I think also that could be very interesting in terms of where bond issuers decide to issue. So I think the environments they issue into, the exchanges they issue into, could create particular levels of benchmark and standard. So you could actually have different levels of standard potentially in terms of benchmarking or execution at the exchange level as well, if supported by regulation. So you may probably find again that certain firms trying to hit the highest benchmark go into the venues that demonstrate the highest benchmarks. And then that could allow potentially that structuring automatically at the structuring stage rather than having to continually adjust that based upon, so you only had the standard once at the exchange, you pick the standard you're going to execute against, and people invest against that. So the technology would absolutely allow that. So the standard lives by itself within the environment, and then the bonds track to the standard, and then the attributes of the bonds could be adjusted based upon that life cycle, whether that's coupon payment or anything else or reporting standards. And I think that's a really interesting concept and something that could be easily deployable if we could have agreement on the particular structure around how that would impact the actual underlying investment with the bond itself.
Yeah. Anyone else wants to sort of define their vision of a smart green bond? We're almost running out of time, but I think we have time for comments on this and then a few closing comments. Vivek or John, do you want to comment on this?
30 seconds on that. So I'm a big believer that investors should not be compromising on returns for investing in sustainability. And I believe ultimately we should move towards a system where the brown issuers are penalized rather than investors are subsidizing people for doing what I would say is the right thing. So, just coming to technology, another 30 seconds. What technology has done, we all know, has made things more efficient, reduced costs. And I think that's what we've seen. Green bonds take a lot more work than standard bonds. And I get every treasurer saying that. Now, there's a report which HSBC did along with the the Sustainable Digital Finance Alliance. And what they said is it costs about $1 million under a standard process to structure price setting and risk rating for a green bond. If you do it fully automated through blockchain, that cost will come down to $20,000. And I think that's the kind of thing that we need to see more happening, where we can use technology to bring some of these costs down and hopefully then get that down to retail investors. Thanks.
I think that retail investors have money, and I know as we at BondEvalue go and speak to people through our bond exchange, individuals, they all are far more genuinely keen on investing in green directly than we otherwise knew. So the bond market has to meet this 23 trillion, tap into them. John, smart green bonds being issued in 2021, possibility, issues, opportunity?
Look, I think it's absolutely a possibility. I think we've made great progress. When you look at where we were both on the green bond space and all on the digital asset side 2 years ago, we've come so far. And I think what's particularly encouraging in the last 12 months has been on the digital asset side, in particular in Singapore, a number of great projects looking at how we really implement this technology. I think in the last 12 months, there's been 3 or 4 really great projects which have shown we can issue securities on the DLT. And so I think what we're talking about now is a fantastic opportunity to mold the two. Maybe just to separate out, I think that, as Justin's mentioned, there's this fantastic quality of blockchain, which is around quality assurance and tracking of information. And then there's a second piece to it, which is the trading and the smart execution. So you're joining both of those together with this technology provides a fantastic opportunity. So I'll go on the record and say, yeah, 21 is when we're going to get there.
Justin, 2021, smart green bond, custodized both digitally and physically with Northern Trust. Do you think possibility?
I'd love possibility, and again, if the opportunity's there, I'll be at the table trying to custody the asset. That's for sure.
And let me add, if you have clients who want to do them, do contact us. We'd love to do it if it's for emerging markets.
I think with that we have a wrap. We have investors, we have custodians, we have lawyers, and we have an exchange that would love to list them. Thank you so much for all your time. Really appreciate it.
Thank you, Rahul, for guiding us through that interesting discussion around blockchain technologies for green bonds.